Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, which makes it just gone 11 o'clock UTC. Big shout out to everybody that's joining the stream live today and everybody that's going to be watching this on recording. So, back from a short break, had an awesome time away, a little place on the southeast coast in England called Suffolk. Beautiful, oldie worldy kind of place, lots of long beach walks with the dogs and lots of really nice ales and local food in the pub. So I hope you've all been well. Markets have been doing what the markets do in that time. So I thought today we'll start, obviously, by taking a quick look at Bitcoin, but obviously opening up the chat and bits and pieces so that we can look for alt request Wednesday as well. So like I say, I hope you've all been well. Give people a little bit of a chance to just come in and then we'll dive in on the charts. I thought today what might be quite interesting is we'll look at our key levels, take a look at Monday's range as well, which I think will play a prominent part this week. Any trade setups that I'm looking at, just to kind of give you a little bit of insight into that. Something else I wanted to touch upon, I give me a lot of questions on this lately, which is like support and resistance, all right? So I just wanted to kind of cover off a really good way that I was taught many years ago by one of the top traditional market traders I've known in terms of how to kind of find those key levels. And then also take a look at kind of premium discount ranges, which again, something I get a lot of questions on lately. So I thought I'd kind of cover again how I use that. With something like that that's an original ICT concept, I always recommend going to the core content. But yeah, I'll show you how I use it for sure. And some really good to see some really familiar faces on the stream today. Imran Khan, great to see you. Whack, fantastic to see you here, buddy. Hope you're enjoying your time with us over at the Nest. Kelly, you absolute New Zealand soldier. Love the fact that it's early hours over there and you're back for the scream. And Hangry Patrick, really, really good friend of mine and a brilliant friend to the Nest. So I'm sure other people kind of flit in and that. We got some good numbers going at the moment. So let's make this big. The other thing I want to touch upon today as well is the really lovely people over at Kingfisher, which is kind of liquidity mapping software, as well as a whole host of other things that I haven't really had the chance to deep dive enough into at the moment. Have been really kind to offer me access and the team to the platform as well to see what we think of it. And I put a post out about it yesterday. I found it really interesting to use. So I wanted to share a little bit of that with you guys today as well. More really in terms of looking at it as an overall market insight. And Kelly, I love this. What an absolute warrior. We're out of daylight savings now, so it's only 11 p.m. I love that. Like, that's not still really late. I absolutely love you, Kelly. You're a star. And really appreciate everybody that joins into the stream to listen to me waffle and ramble a couple of times a week. So before I go out of hand and just digress too much, really, really simply, just going to start off on our daily chart here on Bitcoin. Let me know if there's any issues with the sound or with the visuals as we go along, and kind of go through this and explain it out in a bit more detail as we go. But it's always good to sit with our higher time frame bias. In fact, Wack and I were talking earlier in the group about this. You know, it's so easy to lose that kind of higher time frame bias, and also it can be quite hard sometimes to get that kind of solid read. You know, it's one of those things. Sometimes you see these people on the charts, especially someone like SZ, who just maps these levels like it's kind of coming out of nowhere. And I know it can look really simple when people do that, and then you go to do it yourself with a blank chart and feel a little bit lost. Whack, yes, of course, mate. I certainly can as well. Can you go over the kill zones and the importance of them as well? Yeah, let me just add that to my list down here, bud. And do please remind me, Whack, if I jabber on too much and forget about that. We'll cover that towards the end. So, daily chart. The key things I'm asking myself on a daily chart or any time frame is, first of all, what's capping the market? Yeah, where's the level, the key level that the market's unable to push beyond or break below? So in this case, I think we can see nice and clear that it's this line here. Why, when this high was set, we had a number of days attempting to get above. We see these long wicks absorption. Price can't get accepted above this level and ultimately leads to a big sell-off. Now, what makes that a really interesting range then for me is the idea that basically it's failed to take this. We've had our swing failure pattern, and then prices had to come down to take out this liquidity lower down. Yeah. So then if we were saying to ourselves, what level is capping the market to the downside? Well, the key level I'm interested in here is this. All right. So let's pop that one in. We can see here resistance, 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 these wicks going below it. When basically you get to that point, you're seeing these long downside wicks, price is just getting absorbed, and then you get price sell up into here. Now, we don't always have to take out key resting liquidity. I like to aim for highs and lows, right? However, there's obviously, we need to consider order blocks as well. Now, there's different ways of kind of teaching order block supply and demand. What I'm saying is kind of how I look at it. It's just as I've studied a lot of different people over a number of years. So these concepts are just how I view the market. ICT will teach them differently. SC will look at support, supply and demand zones differently, as well other traders. So what I would say is, if you understand that and that side of trading really speaks to you, and you think, do you know what, I really like the idea here that, this order block, just for argument's sake, this order block here is kind of capping the market. Then when we have this interaction and price sells off again, when we come back to revisit this area, we can monitor that area on the lower time frames for our breakdown patterns. And that's what can kind of add a little bit of confidence to our trading. But if that's something that speaks to you, find other people, go and research back in the days of like Larry Williams, and a number of other people as well, SC, ICT, etc. Crypto Chasers, another fantastic trader, Durd and people like that, and see how they use it, and then kind of come up with your own concepts. Thank you, buddy. Did have a good holiday, and it's great to see you on the stream. So where are we? That's capping the market to the downside. That's capping the market to the upside. That's the key kind of levels that I'm interested in there. Also, the resting liquidity below this low. I think if we're going to purge down lower, I think these are starting to present some really nice liquidity targets. For price to kind of wipe those out, start trapping people that are a bit late to the shorts before potentially reversing. And if we then do something like this, we come down, convince the world and his dog that we're going short. Lots of people jump in too late here. The market often likes to punish these people, use that, large amount of sell orders to fill buy orders. Yeah. And then the market can do something like this. Now, I'm not saying that is exactly what's going to happen, but when you're in this kind of realm, and again, we're looking at this on a daily scale, I'm always very, very cautious of these in case it's a deviation. But when it comes back in, if it comes back within the range, and let's say we're allowing this as our range low, this is our range high for argument's sake, we come back within this range here, then for me, the higher probability trade is to the upside via the kind of EQ, the 50% of this range. So the other thing that we want to be looking at are the candles themselves. Now, I've marked out Monday's high, Monday's low, obviously on Monday, which has now turned into an inside bar pattern as well, right? And we can see already the prominence of this, because if this is our inside bar high, let's find out IBH. Right, and then this is our inside bar low. Our concepts here with our inside bars, I don't know why that's down there. Hang on, I've got to move that to the top or that will really bug me. Right, the concept with our inside bar, so this, I've put a thread out on this, so I'm not going to go into it in too much detail. You can find it pinned to the top of my Twitter. But this, what was Monday's high, Monday's low, as this is Monday, has now turned in upon Tuesday closing to an inside bar pattern. Mother bar, inside bar, both are treated as ranges. Now, what do we expect when we trade ranges? We wait for liquidity to be swept, so a high or low to be interacted with. If on the lower time frames price comes back within, then we start to target the far side of the range via the 50% of that range. What we can see, and we'll look at this on the lower time frames, is that this was swept during Asia, which has caused this sell-off. However, Monday's high and low still prominent. They're now just also our mother bar high and our mother bar low, right? So from here, I'm going to smash straight down onto an hourly, right? What I want to do at the moment is I'm predominantly a low time frame trader. I want to get you guys just kind of my thoughts really on how I'm kind of looking at the market at the moment. Yesterday, we were looking for sweeps. We took a nice short trade with the group. We didn't quite get filled on it, unfortunately, as price just ran away. But that was a lovely 4 or 5 hour trade. Some people kind of went into it based on the candle close. Myself, personally, I like to see the pullbacks to the fair value gaps. And in a later session, actually, I'll show you how you can kind of drop down onto lower time frames to kind of manage those trades out if you don't get your initial fill. But again, as long as you've got clear and obvious liquidity targets, all right? So here on the hourly, let me just get rid of this. Here we go. We can see price has dropped here, and basically we formed this range, right? Now, a good way to look at these ranges is when you have a sell-off like this, and obviously price isn't ranging here. But once we take this sell-off, and then we set a clear high and price starts to break down, then we can always take the low that's set, right? And the reason that I put it to here is because this low was set, then this high was set, and then price came down and interacted with our midline, all right? Let me get rid of this for a minute just to clear this up. So if we now turn this into a range, what we got? There we go. Let's make that colour a bit darker so that it stands out a bit more. Right, so here we have our range. Now we've got that by finding this low, this high, then price has come down, held this midline. For me, that's telling me that this could be a valid setup for a range. So what am I looking for? Deviations of the range high, come back within the range, we target the range low via the midline, right? We don't actually get to the range though, but we get to our first target, price then deviates the midline back to the high, high to the low, low to the high, high, not quite to the low, but we've now had this deviation here. Price has come back within, we've sold off to the low. Obviously, we'd look to trade this on lower time frames. Yakuza and Nitpar, hey guys, sorry, I didn't see you sneak in there. But actually on the hourly, again, I really like to pay attention to the candles. I think sometimes people really do lose sight of the candles as well as the patterns. But look, these wicks to the upside here, you know, the same way as this is coming down here. See how it's kind of being forced down? See the long downside wicks are showing you that this is kind of getting absorbed a bit. Then we ultimately have this big drop here. In my opinion, moves like that are just ideal to trap people on the wrong side. So people have got in short here thinking that it's going down to here. Price then reverses, uses that liquidity to pump higher. Once again, we break out above this level. What do typical retail trading books tell you? Break out of a level, we're going to the moon. Note, again, used to fill orders on the other side of the market as it comes back down. So if we just have a really quick look here on, say, a 5-minute chart. Right? Now, bearing in mind, our range is set here. We've had our interaction with the midline, yeah? So for my trading personally, I target the London and the New York sessions, focusing predominantly on the New York session, which is indicated by this blue line here, which is from this wonderful indicator by a chap I know called Dr. Fuse. And it just, you know, you can get other ones out there as well, but I really want to credit the guy. No affiliation, no paid affiliation or anything, but he does offer some really cool indicators if you check him out. It's DOKTERFUSE on Twitter, and reach out to that guy. Really, really lovely guy. Again, ICT concept trader, a bit more of a traditionalist than I am with ICT concepts, but really, really solid person. But you can get other ones as well. There's one from a guy called the Tradeinator. And I also use this, something called CM, time-based lines. Yeah. And basically what it allows me to do is set the different sessions. So I've got ones for Asia, which you can see comes in yellow. So if I leave this just fully on at the moment, these are my key areas of interest here, which is the start of the New York trading session into the kind of 9:30 point, right? And then this is when I'm really looking to kind of get active around here. But as we can see here in the Asia session, what we've got here is quite a tight consolidation, right? So if we just mark this out quickly and then we follow this through into here, what we can see happens is when we're looking at confluence, we can see the liquidity from the Asia session was run here with a deviation, comes up above the top of this range. What else does it do? Breaks out of our actual range, which is the black line, right? Then what we're looking for here is for price to come up, break market structure to the downside with displacement, right? Which is basically, I want to see an energetic move here, leaving these fair value gaps. And then these fair value gaps can be targeted. We can see how price interacts with it right here, and then ultimately sells off down to the midline. However, for my style of trading, what I like to see actually is a pullback into this here. So a quicker move back like we would have with this one here. So again, if we look at what happened here during Asia, what did we do? We ran the highs of London and New York, yeah? So we took out the prior day's high. We've broken structure here. We've taken out this low. Do we have displacement? Yes, we do. Okay, so let me just draw this up for you. As you guys know, for anybody that watches the stream regularly, it's always the same patterns for me. I'm just looking for the key high. I like to see a sweep after we have a raid of a high time frame level, which was here. We took liquidity from the previous days and the previous trading sessions highs. Okay, then here we can see that we have our market structure shift. Then we have to ask ourselves, okay, do we have a fair value gap in here? We certainly do. We can use our premium discount range as well. And then we're looking for interactions with that before the sell-off. So if anyone's interested in that, I'm happy to write that up and do a thread on it in terms of entry techniques and bits and pieces like that. But really what I want to, the key thing that I'm kind of highlighting here is that by understanding time and price, we can make slightly more accurate assessments of what is going on. But also as well, like I say, you can use it for that. I wouldn't have taken this trade personally because it was in Asia. That's like 2:30 in the morning for me. But as we got here in the New York session, which is my favoured session, this was the short trade setup that we took. Like I say, we didn't get filled here because I was expecting price to return to here, which we didn't quite get. But we did get a nice fill here at this kind of secondary drop, which we dropped down to a 1 minute chart and we can scalp into these lows, right? But then also, because we know, in terms of what we want to see from this, we can see here that then when we run the lows here and we get back above, we can then look for liquidity higher up as long as we meet our trade parameters. No problem. In fact, mate, let me make a note of that. And I will, in fact, do a thread on entries and triggers. Because I think that can be really helpful for people, because really what you want to do in trading is you want to remove the anxiety and the uncertainty of it, right? So for me, my main trading strategy, low time frame trading strategy, is I'm waiting for the beginning of the New York session. Yeah. What I want to see is I want to see the market trapped in the opposite direction, right? So I want to see these kind of moves higher. And then I want the market to show me its willingness to reverse by price dropping lower. All right. Now, before we go on to the rest of the sessions, I just want to show you very quickly on Kingfisher. All right. Now, I know this at the moment looks just like lots of crazy, pretty colors on a chart. But what I want to show you here, which is really, really interesting, and what helped us take this play yesterday, is this liquidity map, right? So this shows you the orders coming into the market. On here at the moment, I know it's still in the hundreds of thousands, right? But when you see the multi-million start to come in and this starts to move really, really quickly, you really, really do get a feel of the market starting to flood. And actually, quite often it's counterintuitive, right? You see the big orders coming in, say bullish orders, similar to volume, can often mean that the market's getting flooded in that respect, ready to go in the other direction. So the market's being pushed that way to encourage buyers to add liquidity that can then be taken by the key and high, you don't want to say high net worth, that's a rubbish term, but you kind of bigger players, whether you're thinking of them as whales or institutions or ICT, we call it smart money. They're on the other side of things waiting to take that. Now, one thing we've got down here is this shows us kind of where the liquidity is resting, right? So when we look at this, at the moment, we can see that it's relatively well balanced. What happened was when this started to come into the level down here, right, we actually saw that this wasn't quite as big. So what's happened is prices now, as this has started to build, these are all your short stops. Yeah. So people that were short here, this is their stop losses. And these stop losses down here belong to people that were long. So these start to get targeted here, as we can see. Then as price builds, this starts to build up underneath. What we're looking for is a clear and obvious move, right? Let me just refresh this quickly. What we're looking for here is clear and obvious weighting from one side to the other, right, with our liquidity chart. So again, we're only ever using this for confluence. We're not just blindly kind of battering into the market and saying like, okay, because liquidity is just offside on one side of the market and not the other, we're going big. It's not really that simple, but it does add really good confidence. If you get the opportunity to look at the Kingfisher chart that I posted yesterday, you'll be able to see this when it really, really was. So here we are at the moment. We've just gone midday. Now, this shows us, that these on this side here are your shorters. People that are short at the moment, this is where the majority of their stop losses are placed at 27,800. So what we can do is we can go onto our chart, mark that level out, and when price comes down to there, then we can start to target it. We say to ourselves, okay, Well, if price is going to run those stops, then, or if it has run those stops, what's it looking like on the other side? Price just has a tendency to gravitate towards the bigger liquidity. But here, it's relatively balanced. If you saw this was much, much smaller and that was a lot larger, yeah, and these lines do help you kind of gauge that, then what it's telling you is that, the chances are if the market's going to really rip for something here, then bigger players might be targeting that liquidity. All right. Now we can see with like the order book here on this side how big orders, 2.9 million, also 2.6 million, 1.9 million, 1.3 million, 1.2 million. There's currently a lot of shorts flooding the market. All right. So what does that mean? Does that mean that everything's just going to crash right away? No, but if that type of interaction happens around one of our key levels, it can add a really cool bit of confidence. Now, I'm still learning this kind of stuff, right? I know obviously the core basics of it. I've been studying it for a while, but I will share it with you more. Like I say, very, very kind of the team over there to give us access to that. So I just wanted to give them a bit of a shout out. Again, there's no paid affiliation with that. Just, some good people in the industry reaching out and helping out some others. So in terms of BTC, and Wax got a good point here. Let's have a look. So looking for a high-low sweep from a previous trading session, i.e. New York to Asia, is acceptable. Yeah, definitely. Again, look, there's loads of different ways to view this. I'll use it as confluence sometimes, but, there's entire ways to play the trading sessions, right? If we put and again, it's about what works for you. I know with the part of the world that you live in, Whack, that actually, the Asia session might be a bit more preferable. Whereas for me, it's kind of, silly o'clock in the morning. Or our good friend Kelly as well, bless her. Won't want to be trading the New York session that kicks off in kind of an hour or two. Yeah, definitely take a look at ARB-MM. Remind me, we're going to do, after this, we're just going to steam straight into our alt request session. So what I'm doing here, right, is just very quickly, see the yellow lines, these represent the Asia range, right? So if I take the high and low of that range and then expand this forward, and I'm just going to do this with a few of them. Yeah, you're very welcome. Very, very welcome, MM. Right, so here we go. And yeah, of course, mate, no problem. Do a knit as well. Do feel free to reach out, guys, if I can help in any way. I will certainly try. So let me just mark these out for you really quickly. Because I've always found this a really interesting way to trade, right? So Asia range, yeah? So we're taking that from the low to the high of the range, drawing that out as a box. Now, the rules that I use to play this, which are very much in line with what I learned under ICT many years ago, is I'm looking to play the deviations because I love range trading, right? It really suits my eye. So what am I looking for here? Asia range low gets swept. We come into New York. We have our sweep, our break of structure. We trade it, targeting Asia's high, yeah? Or the high that might have been set in London, obviously, which we can see here. So Asia's range, sweep the high here in London, target Asia's range low, target breakdown. There we get our trade, all right? This one, similar, Asia's low, up to the high, sweep the low. We look on the lower time frames for our breakout, for our reversal pattern, and then we're targeting the highs. So with stuff like that, what I love to do this. Someone posted this on Twitter the other day. I can't remember who it was, but it's such a good point. Really, you've got to fall in love with data to be a trader, in my opinion. To really want to you want to see things like this, and it really should excite you to think, God, you know what? I just want to flick back for months and months and months and just test this. How many times do we run Asia? If we mark out all of our Asia ranges, how many times when we sweep a high or low do we reverse to the opposite side? And what you might find is there's a 60-65% success rate of that, in which case you can then build an entire strategy around that. Yeah. So you can say to yourself, right, you learn the time scales, the entry techniques, you say to yourself, right, if that happens 7 in every 10 times, yeah, and I'm controlling and minimizing my risk on my account to 2%, as I think it should be, or maybe a little bit lower, then boom. It's just then a case of stepping in and pressing the trigger on your trades. Now, that's not to sound like a twat and make that sound easy, because it's not, because there's the human element, the psychological element, etc. But that's the way that we build these strategies. My own strategy, which is very much based on running highs and lows, key liquidity pools within the New York session, is then I'm looking for that manipulation move where I think big players are stepping in to try and push the market offside, to try and generate the liquidity they need to fill their larger orders to come the other way, in which case, is when we're looking at trading sessions like this. Yeah. And I'm then looking, interesting little move on NASDAQ. We'll check that in a moment. I'm then looking for highs to be swept. I then want to see a breakdown on a lower time frame, and then I'm targeting clean and obvious liquidity. What do I mean by clean and obvious liquidity? I like using the 15-minute chart. Look, these highs, swing highs and swing lows, are nice and clean. The lower the time frame, the more the noise, right? So if you're struggling at the moment trading, I'd really, really recommend getting something like this. Let me just get this up for you. CM, that's Charlie Mother, time-based lines, yeah? And you can put in your own customizable times, right? So I'm going to turn Asia off at the moment because we've been through that. But I've got these on here. These are my traditional market hours, for NASDAQ and ES. Like for equities, these are the ones for crypto. So we can see here, these align perfectly with my indicator from Dr. Fuse, which shows me the New York trading session in full. But my theory is, from the work that I've done in the markets over the years, from studying ICT very early on, as well as a lot of other amazing traders like SC, but also a lot of other people, Larry Williams, other people that use that, Burb as well, for example, who's taught me as much about trend trading as anyone, is I'm looking in this grey box, for some kind of manipulation, right? Or in the blue box. But it has to suit my high time frame bias. And something I use for that is my B Pro, which is our in-house indicator. This, which is our B Pro trailer, is set to an hourly trend bias, meaning that while it's black and above price, like it is here, we're holding a bearish bias, all right? When it's grey and below price, like here, bullish bias. So this, for example, we would look at it on a 5-minute. Here's our sweep, Y taking out all this resting liquidity below here, filling this imbalance. Then we have our break of structure. We're above our high time frame trailer, long, all right? I don't personally trade weekends, right? So that's what we can see here, but we can see we still had some lovely trade setups here. We're below the bearish trailer. We come and interact with this. Price breaks down. We can see there's an order block here, right? That's capping price. We come into this, we fail, have a balanced price range here, we break down. Ultimately, things like that just help me keep in tune with the trades I'm looking to take. Again, here's our sweep, price breaks down. That's where we would look for our entry triggers. And then once again, it doesn't mean that I won't counter trade the trend, but to do so, I need to have a key run on liquidity. And for me, that's very often a prior day high or low, or a key order block that I've seen capping the market, all right? That's what helps get the bias in here as well. And we can see, even on an hourly basis, we're still bearish here on the B Pro trailer. So what I'm looking for here on Bitcoin is I still really do have an eye on this inside bar high, inside bar low. We've run the inside bar high here, like I said, during Asia. So that was a lovely trade, anyone that caught that in Asia. We're now actually being held by our main range midline. Yeah. So I think if we lose this, if we come down, we lose the mid, something like this, I'd like to see a little underside retest of this here, a little cheeky sweep on liquidity. And then that here would be my trigger to go short. I'd be looking at the inside bar low for a reaction. All right. And then ultimately our range low here. And obviously we then have our levels marked out where we can look for lower prices. But what this allows us to do is when we get down to target one, it means we can move our stop loss to entry. Trim a little bit of profit, and then the trade is risk-free. So what would I need to see in terms of bullishness on this? Well, I'd need to see a strong move above these levels. Probably a bit of consolidation here. Again, take that sweep, and then I would expect price to take off. And where to? Just clear and obvious liquidity targets. We've got this high here, so this could provide a nice scalp for us to the upside. And then ultimately we'd be looking at these highs right here. All right. So I hope that makes sense, guys. Now I'm going to switch over. I'm just going to take a quick look at the Nasdaq, and then we're going to dive on to. I think it was ARB. It was ARB from So, guys, if you've got anything you'd like me to take a look at, please do let me know. Also, apologies if I've missed anything from anyone in the chat. Do please ping it forward. Now, to build out just quickly, actually, sorry, because I think I can answer your question here, Whack, in terms of these kill zones, why they're important to me. So when I studied under ICT, he was the first one that really kind of brought the concept of time and price really, really prominently to me. His theory and concept is that it's all to do with an interbank algorithm that reprices and looks around that time. For me, I don't disagree with the guy because I think he's so knowledgeable, but I've also studied it in terms of maximum volume in the markets, and you find that the New York session, and especially the cross between London and the New York session, so the open of the New York session, is when we get these higher volume moves. So for me, it makes sense that you could see price being manipulated in one direction in order to fill those more favorable, those larger accounts before price then flushes out towards the other. I am game. Hey, buddy. Thoughts on SHIB weekly chart? Yeah, no worries. We can definitely take a look at that. So we'll take a look at ARB first, then we'll do some SHIB. So I like to mark out the beginning of the kill zone session here. Yeah. And then I've got London and New York. Yeah. So I've got the London session here. Obviously, London session still runs into New York, into here. But just to make it cleaner, I have it stop here. I'm looking for my setups in London before midday. And like I say, I don't trade London very often unless it's run a key level of mine, and normally wait for New York to play out because I find that has the most high probability setups for my specific system. So I definitely recommend checking out ICT stuff on kill zones. I know his mentorships are very, very long. They're quite convoluted and they're quite complex. There are people on there that decant them down. MMXM, I think, Trader is one that does it incredibly well. But all in all, I think, look, if you're going to want to learn these things, learn from the horse's mouth, as it says. So get onto YouTube, type in ICT kill zones, and really find out from the man who kind of created it how he uses it. He was the one that introduced me to it. I use that core concept of his definitely, but I kind of look at it more from a volume perspective for myself. And talking of that as well, what you can do is you can pop your volume on. Yeah. And what you're looking for is just, if you look at the average along here, if we're expecting reversal here, we're looking for these high volume spikes. Like this one was glorious because we had this huge sell off down into here. This can often be a sign. Yeah. Let me just go back to here. That price is getting ready to move in our desired direction. Yeah, look, I know this is a weekend, but look at this big volume spike here. Everybody's getting trapped into going short. Big volume spike, great place to fill big players' orders to go in the opposite direction, and the market reverses. All right, but again, typically I'm looking for these here, right, within the start of the New York session and the crossover from London. We can see it here. We can also see it here. So do have a play about with that, guys. That's something that I always find interesting. I know I don't share it a lot because I typically keep it off my charts when I'm live or when I'm sharing things, just to keep the charts looking a little bit clearer. So we've got 25 minutes left. I'm going to smash into ARB. We're going to take a look at SHIB on the weekly as well. So let me find ARB. Apologies if the internet's a bit slow today. Actually, in the middle of changing providers, so which is a really interesting thing to do in the UK here because they basically churn into giant children, and obviously there's not much love lost between the different providers, so they're not overly kind to you in these periods. So I'm running this off of a backup hotspot as well. So if it does get a little bit twitchy or if it gets out of sync, please do let me know. Let's hide all of this jazz. There we go. So obviously I've got this on the Bybit chart because this is how I would trade it. I'd be looking, as always, at what I believe is capping the market. So I mean, that level definitely interests me a bit just because it kind of held up. But in terms of where we haven't really gone below until now, we can see this, right? Wicked into it, sells up, doesn't come back into this here, respects the bodies of the candles. Then we have that expansion higher, take out these highs, back below them again, and then ultimately coming back down here to search for this. But what's interesting here is that we've not really had any key closes below this, and now we have. Now price is kind of trying to punch its way higher. I'd be concerned a little bit if I was looking at this on the high time frame. All right, I'd be looking at this FVG here. This is certainly going to be a target. Price could expand higher into this before looking to break down further. However, if we reclaim this here, then we could be looking to push higher up towards these kind of relative equal highs up here. Let's see if we've got any kind of levels around here that are of interest. Yeah, so now the reason I've picked that wick here is because it's a standout wick for me, something really kind of rejected price here, and then it had a big, powerful move, leaving displacement through it, then support, 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 again, big move with displacement through it, showing us that the market's ready to move in the opposite direction, ultimately then moving for liquidity even lower down. So I'd be aware of those levels. And something else that's kind of caught my eye here as well would be this. Or maybe this. Yeah, I think that's even cleaner. So again, we're treating these as kind of areas, guys, rather than necessarily, golden tickets to just short if we get there. But look at the way the wicks, the absorption prices tried to get back up here, failed. Big move below, into the liquidity lower, up to take liquidity above these equal highs here. Price then breaks down again, liquidity below here. And I think we'll find here that we get trapped below the midline, of this range. So when we've got a clean high, clean low, we split this with our Fibonacci at the 50%. And again, we can see the interactions here being held below, holds it above, impulse move below, retests, consolidates within this before ultimately really selling off down here. We can see how price is really trying to get above this level here, but it's just really getting absorbed. So in terms of that, on a higher time frame, looking at it from there, more so on the lower time frame, if I'm looking at this in terms of actually trading this, what would I be looking for here? Now, this is really interesting. I would be looking here at this displacement leg down. Yeah. A really big leg down here. Really is a little bit choppy. We kind of have come above, held the midline here, haven't we? Price is now moving up, but once again, we can see kind of in the process of filling this here. I think actually I drop down to a 15-minute here just to get a cleaner indication of what we're doing. So I think this is probably what's capping the level here. Maybe this here. That kind of area anyway. So we can see we've got this key support here, and we can see this is the resistance. So on this kind of time frame, I'd be looking for price to pull and hold above here. Yeah, so up, little something like this would be ideal. Yeah. Look for that impulse move higher. We want to see displacement, then we're looking for a retrace into that before pushing up higher. Alternatively, I think if we come down here, especially taking out this low, and then we come back in to retest this, we go onto a lower time frame again, look for this breakdown pattern. Obviously looks terrible on this for some reason with the pen. My pen skills aren't amazing. Excuse me. But the reason for that is if we come down and we take out this liquidity and then we find resistance here, if this was a move to take this liquidity out to generate larger orders to move up, price, in my opinion, will move quite quickly above this level, find support, and then look to move higher. All right. So holding below here, we would wait for that little consolidation on the lower time frames, wait for that break of structure or that market structure shift, and then we've got our predetermined levels down here that we can target below these lows, and we've also got our range mid sat there. So I hope that covers what you were looking for on ARB MM. If it doesn't, mate, ping it in the chat and do let me know. I am game. Yeah, we wanted to take a look at SHIB, didn't we, mate? On the weekly. Yeah, we can do that. Let's have a look. Here we go. So, some pretty colours on the chart today. Where have these come from? Thank you, MM. I hope it helps, mate. Ah, there you go. It's always good to go on a chart and see some old TA that doesn't make you look like a complete twat. So we can see here we were looking at this a little while ago on SHIB, this line. Now, I don't use these very often, but it has to be a really, really good fit for me. It just has to be obvious. I like to anchor it to a point, and then I like to respect the bodies on the candles. So this was obvious to here. We can see this. We then got our breakout retest, and ultimately price did grind higher. We had our mother bar in here as well. What happened? We ran the mother bar high, came down, held the midline. Price ultimately then broke out and expanded higher. It then found a little bit of a reversal point here when we took out this key. Like that's why if you really see these outlying wicks, yeah. So look for this one, for example, right? Big high volume candle here, leaving this wick seemingly just in the middle of nowhere. I do like looking at those wicks, right? Because when you look at them like that, quite often you can see, look, support. What happened? Price came into this area, but then again, big impulse move below, perfect retest, sells off, can't get above, sells off again. Again, rejection. But also, look what's happening here with price, right? Look at how it's just compressing up in this triangle. Compressing up, compressing. Now, these patterns typically have a higher percentage chance of breaking out to the upside. And in terms of patterns, someone like Burb, my boy Bast, are unbelievable at this, but also a gentleman called Axel Kaibar, who's a CMT like Burb. Fantastic pattern trader. If you're interested in that, please do check him out. But we can see that. But then where our telltale sign is here. Again, you see how that big candle, that big move down, right? Leaving that fair value gap in there. That's the displacement we're looking for. That's the energy. Ultimately, we don't get our return to here to sell off lower, but that's what we were looking for then on SHIB. But before I digress, none of this is really super important anymore. Start with a nice clean chart. That's better. So, a man wants us to take a look at this on the weekly. I am game. Let's take a look, my friend. Turn this off because it looks like an old set of pajamas. There we go. So, on a weekly scale, let's take a look. Do you know what, actually? Because we're looking on the weekly here, I don't actually know when SHIB come out. I'm not really much of a shitcoin trader, especially meme coins and that. I know they can, I'm not slagging off anyone that does, pardon my French. Because I know some people that trade them really well. It's just me personally, I don't trade them a lot, but I know we quite often want to find some of these old school exchanges that give us a bit more history. Yeah. So I don't know exactly when SHIB came out, but it seems like that could possibly be around there. 2021 seems, I kind of remember it around about then. So, we can see this thing just dropped, as is the case with these things a lot of the time. Basically, launch, all the hype, shield, dump. But we can see from the all-time highs here, we are down really, really at the kind of almost maximum points at the low. So let's have a look here. That kind of representing our ultimate low, right? So, I'm not much of a hodler in truth, right? So not really my kind of place to advise people in terms of this on a long-term purchase. But if I was looking at this in that respect personally, what I would be doing is I'd be looking at these levels to buy. Yeah. So if we're then looking for this down candle here before the move up, they're the kind of levels I'd be interested in. Right now, price is pretty much coming back into this now. So how would we look at this from here? I would be thinking at the moment we've come down and filled this here, this fair value gap. Yeah, so I think if we hold these levels, or maybe we run a little bit below to kind of take out liquidity below those lows, then I'd be looking to get onto lower time frames. And then I'd like to study what happened previously with these reactions. Yeah. So when price came into this here, what did we get? We can see we got that quite aggressive reaction, didn't we? We see like pop, comes back down, and then starts to grind higher. I like that. This was very much like people would say a rounded bottom. So this was a very structured move here. Not kind of ideal. You can see here as this sweeps around and see how it starts to build. You can see that starting to move up. Typically with these type of things, I like to see market structure shifts. I'm not any different on this time frame as I am on the lower time frames, right? I like to see sweeps, right? And then I'm looking for this. This would be the shift of market structure here. Yeah, so often with these, I'll look for this line to have a hold and a close below. You can see you get a couple of retests on it here, and then here, big expansive candle higher. And look, the reason that for me is a decent buy is because I've seen last time it pumped all the way up to here. So we've got this target here. Yeah. Then when we do this and we break out here, well, we've got a few clean, clear targets that we can look for, right? First one. Oh, hang on. I just accidentally hit the space bar, which means that has gone to oblivion. 1 second. Take this opportunity to take a sip of tea, though. Come on, the internet. Here we go. Oh, don't break down on me now, you beauty. Come on. Internet providers, by the way, really good chance for me to slag off BT here, which is the reason we're getting this problem. Good old British telecoms, who have been a real pain in the rear for me lately, unfortunately. Charge an absolute earth to have two apparently unbreakable fibre optic business lines running to my office, and they've been breaking a lot lately. So change providers, which they're not particularly happy about. But it did take us back, trading view, with a little touch of class, onto our SHIB chart. But I think it's the old one, isn't it? Let's just refine that again. Yeah, here we go. Right, so I'll try not to hit the spacebar like a complete muppet again, and drop onto our daily, because this, I think, is not important, but in terms of how I trade, it's certainly how I like to look at these things. So I was looking at this high again. Remember, like I said, you get these kind of like standout wicks. Yeah. So that becomes a target one. Also, when you kind of drag this across, interesting, isn't it? Look, support, 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 key support, resistance flip, and starts to sell off. Why? It's not just kind of picking wicks at random. It's just the same way that you would kind of look at this wick down here. Yeah. Why is it of interest? Well, because something clearly, a lot of buyers stepped in there, right? So when you start losing this level and you see price getting pinned below it, you can expect quite often that it's going to have to search for liquidity lower. Similar with this one here as well, right? But before any of that PA played out, that was merely a target for us. Yeah. So why do I like this move of kind of looking at this area? Because we know where we're wrong. Yeah. Now, if I'm playing the same premise as this one, that price has dropped into this level, found the buyers that it had previously and is moving forward, I've got a really, really key and easy way to invalidate this. Yeah, I know where I'm wrong under here. Because then if it does purge lower, I can then look for buyers further down. If it gets below this, I'm not really interested until it starts to do some kind of recovery, because it's in uncharted territory. So what would a trade like this look like? You'd be looking to enter when you get a good close above here. Even if you entered on the close of this candle all the way up here, you know you're wrong below here. Always put it a few pips below, or I always put it a few pips below. And then I know when I get to here, I've got a really nice percentage. I'm almost 18% up on the trade, 1.7R. At that point, I can trim a little profit, or not even trim a little profit, but what I would do is just move my stops to entry, right? And I would do that just to de-risk, because realistically, my target's here, yeah? And we can see we sweep that nicely. So if I hold on to that, I'm selling most of my position up here, 7.42R. If your risk is $100, you've made $700 at that point. I'd cash out maybe 80% of that, leave some in to run. And then when we get these key breakdowns here, yeah, so price comes in, sets this low up. We've got these highs here. When we start coming down, closing below those lows, that's when I'd be looking to get out, and I'd just book the rest of mine at, say, another 3R. Yeah, so you take another few $100 off the table at that point as well. All right. So that's how I'd be looking at SHIB at the moment, guys. I hope that's helpful. I know we're looking at that on a more high time frame basis, but for me, I am a simple creature. I do like to kind of keep these things the same on the low time frames as the high time frames as well. Now, there were just a couple of things I wanted to cover with you guys again today, just before we go. If it's of any interest to you, of course, you don't have to stay around for it. But support and resistance. Just been getting a lot of questions on this lately, with people saying, like, I don't really understand where people are getting these SR levels from. I'm picking them off of high time frame candles, but I don't see how they hold, or it never seems to come into my exact level. Well, first of all, something really interesting is that they're not really lines like this. They're just kind of indicative of the area that we're looking at. A lot more often, they're kind of more boxes. But what I wanted to show you guys was just a really interesting way that you can look at all of this. So let me just clean this up quickly, actually. I don't want this to get super messy. Today, 10th of the 5th. So here we go. Now, when we're looking at a chart, I like to kind of get onto that and then compress the chart. Whack, loving the BT slag off. Do you know what? I very, very rarely say anything derogatory about people or companies on stream, but I've got a few coming up recently, I think, that I'm going to start to vent on, because they're really starting to get on my nerves. So when we're looking at this, right, where would you be looking for in terms of key support and resistance? I'll tell you where I'm looking for. Let me just get rid of this. Where are the most aggressive reactions? Yeah, so I hover this over and I'm looking at these key highs. So identify a key high or a key low where there was a big sell-off afterwards, and then do this, right? Well, certainly this is what I like to do. I'm looking at these areas, I'm saying, like, okay, if I'm looking at this, yeah, and I've just done that based on popping it on that high there. Yeah. Now, this isn't the cleanest for me, actually. We can see we get the interaction there, but it's not really that much of an interaction. We can see price really sells off heavily there and there. I don't really like this here, right? And this is all a bit choppy. I don't really want to see price sticking to the level. You're going to get it in some places, and obviously you move it across different time frames as well, right? But what I'm really looking for is a point of confluence where I can move this and say, okay, well, actually, I kind of put it more like here. What if I'm in this kind of area, right? What's this telling me as price comes in here? Yeah, we can see, if we look back here, we can see these interactions that price has with the level. Yeah, because what I want to see is an aggressive move away from it. Price comes in, see how it bounces, ultimately a big setup. Why? The absorption below here, it can't get acceptance of cheaper prices, therefore it needs to sell at a higher price, so it goes looking for willing buyers higher up. The same with this. We come into this kind of area here, again, not perfectly, but we have this big sell-off, right? But look, price comes in, aggressive move away. Deviation, price comes underneath, retests it, sells off, interacts again, sells off again, interacts again, big sell-off lower. Then when we see these big expansive moves above it, these impulse moves higher, then we can see when price comes into this area again, we want to see it hold. And we can see it holds here, ultimately leading to this move higher. I don't mind price consolidating above or below it. What I don't want to see is it kind of muddling in between the lines, yeah? And then again, we can see it here, price comes in. But notice this, right? Price doesn't really bounce aggressively here. Comes up here, but that's not really off of a bounce. This is a bit structured. So for me, I'm looking at that thinking, is that a liquidity sweep? Yeah. Then we get this bounce here again, very structured as it moves higher. So let's look at another level further down, something like this, for example. Yeah. Once again, I'm doing this by eye. I've just picked a time frame at random. All right, have a play about with your charts to see what you're kind of finding on this as well. But let's even, just for example, just to show we're not cherry picking anything here, let's move to a higher time frame. And just go back to a bit of a random point. Here we go. That'll do. Why not? And then we're saying to ourselves, okay, look, if this, imagine we've just got this data in front of us here. Yeah? So let's move that forward. Well, fine. We know that we can see that that's kind of capping the market here, but there's obviously key levels elsewhere as well, right? So when we're in here, I'm always saying, well, where's the point that price broke down here? We can see that we've had that interaction here. And if we move that up a little bit higher to say here, now for me, all of a sudden, this is cleaner. Why is this cleaner? Because look at the V-shaped move that we have when price comes in here. Moves away, sells higher, ultimately taking out liquidity. Price breaks down, looks for liquidity lower here, takes out these equal lows here, finds support here, right? And then look at this reaction, sells straight up. Now, this has wiped out all of the liquidity above here. Retro Water, hey buddy, how you doing? Right, wipes out liquidity, ultimately breaks down. But then we get this. Impulse move lower with displacement, retest of this level, aggressive sell-off. So then when we go forward, and we can also look backwards as well to see if there's any historical interaction with that. And then when we move forward, we can see that price is a bit choppy here, right? So we probably didn't get this exactly right with the last one, but can you see how if we're making allowance of this in a kind of box almost sense, this is kind of giving us the equilibrium. We're saying, look, price isn't really firing away from this level, is it, right? Price isn't coming in aggressively and then immediately coming back like we saw with some of those V-shaped recoveries, right, or rejections. It's kind of sticking here, right? Which for me is a sign that price is a little bit uncertain. Now, this line here is probably actually more like, it's more like a box, like an area, right? And then when you see this one over and price start to expand, that's when you can start targeting those levels. And I do this a lot on the low time frames as well. I like it to add a bit of confluence to my trade setups. So we'll stop it right here to save the internet a little bit, but also to show that we're not cherry picking anything. So in terms of interactions, my system is I like to trade the New York session. So as we come into New York here, I'm looking for price to potentially reverse. Why? Because we can see that we've taken out these highs. We've swept some key highs. We're stepping into New York. We've had this move higher. I'm then saying, okay, I want to see this held, and then I want to see displacement, right? Which we ultimately get here. Yeah, this was actually yesterday's trading. I thought I'd come back a bit further than that, but I thought it looked similar. But we can see that there. So what can I add in as some confluence here to say, okay, well, what else is telling me that price might reverse here? We look back to these downside wicks, Now, for me, that's showing that something's capped the market there. So if I take the average of that and I say, okay, well, where would we be looking here? I'd probably say in and around this kind of area. Why? Because big V-shaped recovery here, price comes above, interacts here, support, 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 big move through it, We then retest it here, resistance, resistance. Is this a deviation? Well, what would tell us that it is? This, the fact that we come up, deviate, close back within the range, and then we're looking for it to search liquidity lower below these lows. Again, as we play this forward, we can see rejection, rejection. And this was, like I said, in no man's land, this trade, right? This was in the Asia session. But look how that would have also helped us kind of add a bit of confluence to that as well. So sometimes, look, you can pick support resistance levels using high time frame charts. I do that a lot. But when you're kind of building these ideas and these trade concepts, do take a look at the chart and see what it's telling you in terms of that. If there's really clear, obvious support resistance flip here, support, 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 big move through it, resistance. As we're then coming into this again, well, if we were treating this as a range, I'd be looking for that to break up, and then I'd be marking that high, and then I would want to see price hold itself above here. If it did that, then I'm targeting these highs, right? We can then wait for the bullish structure to be formed, and then we can move up. We don't need to be in a rush here. Ultimately, we're expecting the deviation, which we get. Then we get our break of structure down here, and then we can trade this lower down. So look, guys, I think we're going to finish this pretty much bang on an hour. Just wanted to say a big thank you for everybody joining the stream again. I know probably been a bit rusty today after a little bit of time off. We'll be smashing it again on Monday, and then we'll be back into alt requests on Wednesday. Guys, do reach out to me on Twitter if you've got any questions about these bits and pieces, and do take advantage of the ability to go through for, well, two things. You can come and join and get our trading team calls for free through our partner Bybit, which the link's down in the description. All you have to do is deposit, I think, a minimum of $100, and you get a month access to that, and you can keep rolling that. 72% win rate for the team so far this month, which is really, really big. And bearing in mind that most of that is profitable above kind of 35% win rate, we're really, really going after it this month. And it's been a really, really successful year for the team. We're transparent about all of our trades, all of our setups that we do, and we do walk it through. But as I say to everyone, I don't ever recommend anybody use that as a platform to moving forward, right? Don't rely on other people for your calls. Come and get access to something like that so that you can make a little bit of money, or hold your portfolio while you're learning to trade, and you learn these skills for yourself. And that's really what we specialize in, is education. So you can grab yourself a 7-day free trial in the link below as well. And yeah, come and see us, come and see what we're all about. And if not, you can always reach out to me at Twitter at BC_Richfield. Hope you guys all have an amazing week. Really looking forward to seeing you next week. If you've got anything you want me to cover, then please do let me know. In terms of education as well, if you want to know more about support resistance, if you want to know more about range trading, how I trade, pattern setups, etc. I haven't forgotten as well, I think, the thread on entry triggers. I'll try and get that out later on today for everyone. All right. Have a fantastic week, guys. Trade safe. Remember, we have got CPI coming up as well. I'm wishing everyone a fantastic week. I'll see you guys around the nest.